When we think about the panelists, you've got three very accomplished women. To my left, you've got Rachel Tyler, who had her Bachelor's of Business degree at Northeastern in 1990. She insisted that I mention she was part of the Division I field hockey team. She's a senior vice president at Fidelity Management Trust Company. Very senior role there, and has had many leadership roles within their organization. To her left, in the middle, Mary Deatherage, who's a managing director in Morgan Stanley's private wealth management business. She has been ranked for 9 years in a row in Barron's Top 100 Women for Investment Advisors, and is a parent of a Northeastern student who will graduate very soon. And then to her left, my far left, Fran, Janis, who received her MBA from Northeastern in 1982, is a member of the Board of Trustees here, and has spent 32 years in the private equity business, and she can legitimately say she was involved in private equity before it was cool. Again, though, I think we just finished an interview over in the room, and one of the questions that was asked is what would you say, to either graduates or people that are involved in the school as you think about your own professional careers, the resources you have at your disposal, having the opportunity to have mentors like the three people on the stage in wherever you end up working is a critical component, and looking to them as leaders is a critical component to your own career. So we're going to start with essentially each person as we work across the stage, and I'll ask Rachel to go first, just talking about how they got into the financial services industry, and then what was it that led them into their own unique roles, whether it be in financial services at the trust department at Fidelity, and in the private wealth management business for Mary, and in the private equity arena for Fran. So please, Rachel.
Oh, thank you very much, Mike. So I had when I graduated from Northeastern, I had an exact calendar of exactly what I was going to do for the next 50 years of my career. It clearly fell apart day one. No, seriously. So I take a lot of credit for Northeastern and the co-op program. I was a junior here at Northeastern, and I was an accounting major. And I was supposed to be a purchasing agent for the state. And 2 weeks before I was supposed to start, I got a call, and they said, sorry, we don't have the funding, you don't have a job. Panic. I didn't know what to do. I went to my advisor, and I said, you don't understand, when I'm not in school, I'm paying my own way. I've got to pay for my room and board, et cetera. And they looked on the board, and this is old school, right? So there was a board that had handwritten on it exactly what the jobs that were open. And so there was nothing left. There was one or two. Well, there was a position open at State Street, and it was a trade processing job. I didn't care what it was. I needed a job. So I accepted it. And I started as a trade processor, which was basically taking trade instructions from investment managers, and I was writing them out on a piece of paper and then processing it through to the next stage. That was the best career decision I ever made, and it was by default. I had no idea this is what I wanted to do. But I actually stayed with State Street for nearly 6 years. So I stayed as an intern from my entire junior year, my senior year as well. And when I went to graduate, I asked my boss at the time, and I said, could you please help me? I would like to go over and learn about mutual funds. And that laid the groundwork for the rest of my career.
Mary. I have a mic, so is this good? Okay. So, well, when I was a kid, I always wanted to be a teacher, and I really never understood why the neighborhood kids on rainy days did not enjoy sitting in my basement while I gave them tests. I thought the tests were very fun. And because I didn't like blood, because that was pretty much the choice, you're going to be a teacher or a nurse, and I really couldn't stand blood, so I had to be a teacher. And I loved being a teacher for 5 years until the last year we had so many field trips and so many events and so many projects and programs that the kids were feeling like I was kind of on speed or something, and I realized I'd outgrown teaching. Because I basically knew how to influence people by delivering a message in a kind of a straightforward manner, hopefully. So at the time I decided I wanted to go become an accountant because I really liked the idea of getting promoted. I love getting promoted. And so Because as a teacher, like I was at a Catholic school, and I'll never forget the principal, Sister Eileen, said to me one year, she goes, Mary, you've done such a good job. The 6th grade coming up are horrible, and we're giving them to you. And don't tell anyone, but Father Kenny and I have agreed we're going to give you $15 more a month. But don't tell anyone. I'm like, oh, this is awesome. So anyway, so I go to grad school, got a CPA, went to work for PricewaterhouseCoopers, and then I got promoted. It was awesome. And every time I got promoted, I knew what I had to do to get promoted again and again. And I was like, I actually had a mentor, an older partner, who looked at me with his glasses at the bridge of his nose, and he said, you know, you're very ambitious. Yeah? Like, there's something wrong with that? So anyway, I liked the fact that I could learn difficult things. I could get promoted. I could manage people. I knew where my career path was every minute of every day because I had my eye on the prize, okay? And I got close to being a partner, and I realized, gosh, I really miss people. Like, these are numbers. And guess what? When you're an auditor, clients are not really that happy to see you. They kind of enjoy getting up together at lunch. They really didn't like that because you're there to find their mistakes. They don't like that. So basically, my husband decided that I should get into wealth management. He's a very good career advisor. And so I'll never forget, I didn't go to work at Dean Witter, but I went to the Dean Witter recruiter, and I described I've been a teacher and why, and I was a CPA and why I thought I wanted to make a change. And he leaned back and he said, well, it's pretty clear you're a case of a square peg in a round hole. Like, you'll fit in that round hole, but you'll never be comfortable. And I went, boing! Okay, now I get it. And I think that's a career advice for anybody going into it. Like, you may be able to fit yourself in any hole they put you in, but if it's not you and you're not happy, figure out the hole you're going to be happy in and find it. Okay? So I love this. It's really sad because these guys are really jealous because I have the best job in the world. Very sad for everyone else. I love my job, which we'll talk about a little bit. But it's been a great evolution from dealing with people all day long as a teacher, learning how to influence people, get a complex issue across in hopefully a cogent manner. And then the CPA piece of it, which is I understand technical stuff, it doesn't scare me half to death. And like I always say to my clients, is like, the good sign, like you go to a doctor and you really want to know they're way smart. I don't need to look at their diplomas. I want to know they're smart though, okay? But the way I'll know they're smart is if they take all that smarts and they can distill their knowledge to explain to me in English what my dread disease is, okay? I want them to say it in very straightforward language that I can understand and then tell me what my 3 choices are, and the bonus point goes when they tell me what they would do. And that's what we try to do in business, is take the complex and bring it into reality in a fashion that people can understand. So that's my journey.
That's awesome. This morning when I was having breakfast with my 13-year-old son, I said, I'm going to Boston today, so I won't be home for dinner. And I want you should know I'm going to go speak on a panel. And he said, oh, what are you going to speak about? And I said, well, it's called Women Who Inspire. And he laughed. So you cannot listen to anything I say today and take it seriously, because my son doesn't. I graduated from a state university with a degree in marketing in 1980, or as I was about to realize I was graduating with a degree in marketing. I thought that there was not much of a career that one could have with an undergraduate degree in marketing. So I actually decided that Northeastern would be a great program for me because I wanted to get my MBA because I was determined to get a job and be able to support myself. And so the program that I was accepted to, the MBA program at Northeastern, would give me some work experience. But I had 9 months before I started that program. So in those 9 months, I thought, well, this is a good opportunity. I will get a job and make some money. So I got a job as the receptionist at a venture capital fund called Alan Patricof Associates in the summer of 1980, which was the summer that Apple Computer went public, and Alan Patricof backed it. It was the summer that Genentech went public, and Alan Patricof backed it. So it was kind of a cool summer for me. And I was like, you know, this venture capital stuff is really interesting. There was a partner there named Ed Goodman who I just immediately sort of, you know, kind of fell in love with and thought was this, you know, incredible human being. And so I told him I was leaving to go to business school, and he said, "That's great. When you get out, call me." And so I did. When I got out, I decided, so I go to Northeastern, I major in finance. I had the worst internship ever. It was back then there were not many options. I got a job in accounting compliance. That was my internship. If you can imagine, I was like proofreading 10 Qs and 10 Ks or something like that. So it was horrible. So I knew what I didn't want to do when I got out of school, but I didn't really know what I wanted to do, although I thought I wanted to go into not investment banking, commercial banking. Because back in 1982, like the biggest banks you can get into were sort of what was really cool, right? I mean, it was a long time ago, so small little companies were not cool at all. So I applied to all kinds of programs in commercial lending, and I was getting close to getting a job offer from a specific bank, and I think I called this gentleman who I had gotten great advice from previously, and went to see him, and he said, "Hey, why don't you come work here?" And I said, "Well, what would I possibly learn here? You know, there are only 15 of you, and you're all sitting in this little office, and venture capital, huh?" I want to work in a big bank, and I was sort of in my mind, at least back then, that was sort of what seemed like success. And he convinced me that that would be a great place to be, and he made the greatest career choice for me ever. So I joined him in 1982, and that's how I got into venture capital. Obviously, another well planned out career.
I think that's an overriding theme is that all three of the panelists had an opportunity to gravitate towards things that meant a lot to them and were important to them over the course of their own career development. Obviously, I have benefited from that. Just individually, I'll start again with Rachel. When you think about trends in financial services today, what are the types of trends that you see, and also you might tie some of that into your role, but the work that you do in the risk arena as well, and if there are things there that kind of fit with that.
Sure. This is like a loaded question. What are the industry trends? Oh goodness, what are you covering? No. So some of the trends, certainly, if you open the paper every day, there's a lot of regulatory lens on the financial services industry from the government, from the Department of Labor. A lot of transparency, people wanting to make, Mary talked about making the complex simple. How do we make the industry complex, make it simple so that the average person understands what they're doing? What does their 401k statement say, 403b? What is an IRA? How can I save money? And there's a lot of goodness that comes out of regulation. There's a lot of hard work on the back end to get it to be, making that complex simple. Certainly that's one of the trends, and I'm sure Mary's going to dig into this more, I have a hunch. Some of the other trends, I was just looking at my notes too. I mean, there's money market reform too from a trending perspective. From an investment vehicle type, there's certainly a shift because of the transparencies that everyone's asking for. Different investment vehicles are being offered. Traditionally, we all think about mutual funds in the 401k space. Certainly, there are different investment vehicle types like commingled pools or separately managed accounts. There's this new term called white label that's going on in the industry today, which is a unique investment product that allows those that are responsible for your 401k investment decisions to hire Morgan Stanley or fire Goldman Sachs or something like that without necessarily having to do a broader communication to the marketplace. So there are things like that that are going on. I didn't mean to pick on you guys, but Fidelity's always in the mix. So those are certainly some of the trends. And my conversations earlier this evening with a few of the folks in the room, we talked about compliance. If you think about the financial service industry, there's a lot of compliance needs to help, again, regulate. Did I just say regulate? Regulate our industry and making sure that we're in compliance with what the rules are. And that's a growing field in the financial services today. So those are a couple trends.
I think compliance is one of growing industries within
Yeah.
financial services.
It is. And you asked me about risk.
Mm-hmm.
You know, if I think about what my role is, I'm not an investment manager or portfolio manager. I'm really an operations gal. So from a risk from my perspective, it's, you know, how do you block and tackle? How do you make sure that nothing gets by us? I always say that if I miss on something, if I have a risk in my department and I fail on something, that means that we may lose a client, and I can't do that. So I have a lot of checks and balances and procedures. And again, when you think about a compliance, am I complying with the procedures that I've set forth? We are regulated, we are audited by audit firms to make sure that we're doing things appropriately as we design, and they help us identify if there's an area that we need to fix. But from a regulation, from a risk perspective, I think certainly there's a lot of focus on the financial services and how are we going to respond to that.
All right, thanks, Rachel. Now, Mary, not only from a trend standpoint for your own business, but you're in a very client-facing role. And when you think about the things for your clients, what are the trends that you see that your clients are either looking for or changing, and even as it relates to things like emerging markets and outside the the traditional scope of what even from the amount of time that your clients have been with you, the things that have changed or changing.
So the question's about emerging markets.
Yeah.
Okay.
Yeah.
So actually, I only quote other people when they say something really smart. So if you say something really smart, I write it right down. So I was at a lecture recently where the guy on the stage said that we should no longer call them emerging markets because they did. We should call them growth markets because we don't. So you can write that down, right? Basically, the risk clearly in having an Indonesia, there's emerging markets as frontier. So frontier might be Bolivia, it might be Nigeria, it may be, believe it or not, frontier the other day was described to me as Saudi Arabia. Who knew? But the idea being that emerging markets, you think of Brazil, Russia, India, China, the BRIC countries that are kind of really coming up and becoming a forefront. It was interesting, the other day I heard that there's one family that produces all the shoe insoles in the world. And they're from India, okay? And they showed the hotspots of where they're shipping shoe insoles. That's where you want to invest. Because literally that's where people are going to be growing consumers enough that they're going to want to buy more shoes. And when you look at the hotspots on the world map, it's frontier. It's the east coast of Africa. It's central South America. It's Mexico. It's places that they're the growing consumers where Americans don't consume as much anymore, but those countries are coming from a very low base so they can grow pretty quickly. And they're going to want shoes. That's a symbol, you think about it, that's a symbol of success in the world, that you can actually have shoes, maybe a couple, 3 pair. And that's a pretty basic level of consumerism, but let's face it, that's the start. So the whole frontier market is a very different world than emerging. But we talk about risk all the time with my clients because risk is not a dirty word. You just have to know how much you want to take. Okay? And that's the important part, is knowing how much you can handle and taking only that. I have clients that are very, very risk conscious and love it, and I have clients that are very risk averse. I just want to find that sweet spot for them so I'm meeting their expectations and their comfort zone, okay? But emerging markets, you can have currencies flipping around. The US dollar is so strong right now. What's that doing, okay? You can have political risks. One of the things I learned the other day is that a lot of emerging markets, let's just take Vietnam. Vietnam has many publicly traded companies. They're very small, but they're either, the publicly traded companies behind the curtain are either government owned, or the president of Vietnam's son owns the biggest electric company and his daughter owns the biggest bank. So my question is, do you want to own those companies? So you can't just say, let's buy an index fund to own the emerging markets, because a lot of it's banks that may be Swiss banks for all you know. So those are the kinds of risks that we talk about.
Right. And Fran, from a private equity perspective, when you go to look at the companies that you want to invest in or be part of, when you think about the amount of data, we're just all kind of overwhelmed with the amount of data that you've got to look at. How has that helped you identify trends and change the way you've looked at things?
So let me just specifically tell you what it is that we do. Mm-hmm. So we're not investing directly in companies. Mm-hmm. So we create a secondary market for limited partnership interests in private equity funds. And what that means is if you're an investor in Blackstone, which traditionally private equity funds have 10-year lives, and they are illiquid vehicles. Like on and off a little. You have no way of really getting out of those vehicles. We create basically a liquid market for that. So we will go to an institution that has an investment in a fund like Blackstone who wants liquidity for one reason or another and buy out their limited partnership interest. And then we'll hold on to it for the rest of the term of that partnership. So the type of analysis that we do is we look at the underlying portfolio companies within those funds, analyze those companies, and value them and decide what we're willing to pay and buy those assets at some discount to what they're valued at. So my business is less about trends, more about valuing companies. And the issue that we have is, if anything, too much data. You know, the amount of data that you can get now is so different than when I started in the business 20 years ago, where you had very little data available. Now, you know, the internet has created this ability to get, you know, volumes of data on all types of companies. Now, most of these companies are private, so it's not like we're buying into public companies, so it's somewhat contained. But the issues for us are more about our judgment about the data and how we sort of, in a very short period of time, can evaluate these companies and make a decision about what we'd be willing to pay for it. Obviously, it's a competitive market. So pricing is important, and we need to also assess the risks. And as Mary said, everything has its risks. Every investment that you make has risks, and you just have to determine, you have to understand the risks, and then you have to understand what the trade-offs are and what risks you're willing to take. So our investors in our funds understand that there are risks involved, but they also understand that, you know, you get a certain amount of return to take some amount of risk. When we think about sort of the data side of the equation, it's much more about us, over the course of a week, having to evaluate, you know, hundreds of companies, basically value them, value a portfolio, you know, model lots of companies, lots of funds, roll it up into a big model, do a lot of analysis, and sort of have the judgment to make assumptions about sort of how we think about company growth over periods of time, how we think markets will do over periods of time. Most of it is US, but we do look globally. So, I mean, there's some judgment involved in what we're thinking about, you know, what's happening in other markets. However, it's much more about how we take the data, synthesize it, and come up with something that makes sense from a judgment standpoint, where we price it and hopefully can sort of buy it. So I think, you know, today's world is about just too much information almost, and being able to figure out how to kind of call it and decide what's important. Yeah,
it makes sense. I think just when you think about whether it's trends in each of these industries, you know, I think one of the takeaways is it just, you know, I guess it's always been dynamic. It'll continue to be so, and you know, the ability to just be able to, you know, field audible, if you will, and make judgments. Which leads us to a category that I know everybody in the room is interested in from a leadership perspective. Rachel, when you think about financial...
Make Rachel answer again first.
Say it again?
Don't make Rachel answer first again. It's not fair.
Am I doing a bad job?
You want me to work backwards, Fran?
You're doing great. I just, you know...
Inspired. I don't care what
just try to work it through. But Rachel, when you think about the financial services industry... you know, how do you see the leadership landscape changing over the course of the next 3 to 5 years? And, you know, I mentioned earlier when we were talking about you in your bio, it talks about the leadership opportunities. What kind of led you to pursue some of those opportunities?
So I had a roadmap. No.
And you've stayed on it.
And I stayed on it, and it's worked out so well. So plan. No. You know, I think really from a leadership perspective, I think one of the questions I was anticipating you asking was, you know, more from a demographic perspective of leadership. You know, historically, I've read that in the financial services industry, it's been mostly male-dominated for years. And I can say when I first joined Fidelity 19 years ago, I remember first sitting in my first management meeting. I was managing a small team of 7 or 10 people. And I was so proud, and I'm a manager, so I'm walking in, I'm sitting up straight. I'm the first one there because I like to be, on time, in the meeting, prepared. And I sit in this room, and it's just a pretty large room, and I see 19 men walk in the room, and me. And I scratched my head, and I said, okay, all right. So I sat up a little taller. Anyway, so my story goes, I had a meeting, a senior meeting this morning. And I was, again, one of the first ladies in the room. And I watched 8 other of my women colleagues come and join me, and 6 men. So I can tell you just from that story in itself, what's the landscape change? In my experience at Fidelity, that should say a lot to you, which is the demographic has shifted. Now, if I look out 3 to 5 years, do I think it's going to dramatically turn so it will be a women-dominated industry? And I don't think that's going to be the case. I do think that there's a lot of things that are going on in the industry from a talent perspective, because obviously from a woman's perspective, a lot of people take a pause in their career and they have a family. And sometimes it's a hard choice of how do you balance out having a family and children and that responsibility and giving up your career. And so I think there's a lot of hard decisions that females have had to make in the past. I think from from a perspective of talent, that's a lot of great talent that's left the industry. And a lot of companies are now looking and having more of a broader side of how do we re-engage those women that have left and have them come back, because there's such a great talent pool. And you need the balance between men and women in the industry. There are strengths on both sides, and you can't be successful without them both. But I do think that there's a little bit of a shift of how do we go and reconnect with those that have left, that have been in senior positions or in leader positions, and bring them back into the industry.
Okay. Thanks.
I'm not even talking.
We're not. So with that, we won't.
Don't worry.
We won't. With that, Fran, I can't skip Mary now and go to you. But anyway, Mary, when you think about, again, from a leadership perspective, some of the best decisions that you've made in running the running of your business recently, and how would you describe your leadership style?
Well, my leadership style is benign autocracy. I'm the queen of all survey, but I'm very nice about it. So basically, yeah, I like to be the boss, but I think that my team would say that I process all suggestions, that I welcome and embrace their suggestions. But do you ever watch Shark Tank? Okay, so anyway, Barbara Corcoran's a good friend of mine. Now, Barbara Corcoran's a little wacky, but she's a good friend of mine, and I was bemoaning the fact one time that I'm really bad at hiring people, because one of my problems is if I meet you and I like you, which I kind of like everybody, it's like a disability I've got. So really it's a problem, because if I like you, I'm worried maybe no one else will hire you, so I should hire you. But then the problem is, once I do, if it goes against you, then I'm like a hen, like pecking away at you, because I'm not happy if you're not delivering. Okay, this is a problem. It's a big problem. So now I'm not allowed to interview anybody. Only in, it's like the 4th run, they say, okay, she can be married now. Because what's interesting, Barbara Corcoran says, oh, no. She goes, I'm a really good hirer. Now, she ran a big real estate agency in New York, okay, and all over the East Coast, I guess, now. So she says, if I'm hiring a salesperson, I'm hiring management, I'm hiring a technology person, I'm hiring an admin, I'm really good. Because let's face it, within 5 minutes of meeting you, I know exactly who you are, because there are only 2 kinds of people in the world. There's expanders and there's containers. Okay, maybe you probably already figured out which one I am. Okay, but the point is, like, you have to scrape me off the ceiling, right? However, we should never jump to the conclusion that we need a whole society of containers. Because like the T-Rex in the jungle, if you had a whole bunch of T-Rexes, we'd eat each other for lunch and there'd be no life left on Earth, okay? What we need are a bunch of containers, and I respect my containers. My containers don't like to color outside the lines. I love coloring outside the lines, okay? But they're going to take care of everybody. They like the rules. They want to follow the rules. We need that in financial services. There's a lot of risk, right? However, I'm the one kind of thinking strategically. So I'm always kind of where the puck's going, hopefully, and thinking about the client in kind of a broader sense of like maybe opening up their possibilities, where they're very much about containing the data. You need a good blend of containers and expanders, but you can't just have one expander. You need to accept that even containers who may think that I want to follow the rules have a very good view on what's really going on. So as a leader, I think it's really important that you accept everybody's opinion and you don't, in my case, hire anybody, that you let everyone else do that for you. It works for me.
Great, thank you. And Fran, again, staying with the leadership theme, your guiding principles for good management, kind of what is it that you look for?
So 21 years ago, my partner and I started our own private equity firm, and we now have 44 people, 3 offices. And I don't think we had any guiding principles to start, and nor do I think we have any guiding principles today. And we both agree that we're both bad managers. That we absolutely agree with. But we also agree that what we've ended up with is a group of people and a culture that works because we hire the right people. And if you hire the right people, and by that I mean, for us at least, it's people that are self-motivated, self-starters, interested, engaged, smart young people. They don't need a lot of management, and we're very low on management skills. So if someone needs to be managed, they just will not do well at Pomona. And so the turnover that we have is a result of that. So the hard part is, it's not that we always get it right, and it's not that, we haven't been wrong on certain people, but if we get the right people in place, then we have to manage a lot less. Having said that, once the people are in place, we have a very open culture, very communicative. People know what's expected of them. Our doors are always open. We sit and eat lunch with everybody. It's not hierarchical. It's not partners there, associates there. Don't talk to them. We have all investment decisions are made with the entire investment team, although theoretically the only people that really vote are the partners, but it doesn't act like that. It's everybody's opinion in the room is taken, starting from the most junior level people. So it's a very open culture, okay? So we want people to learn by experience and by sitting around people that have been there a lot longer than they have, and so a lot of it is, learning by example. We also have learned to be more flexible, which is something that we've learned over time. I mean, I think we used to be a little bit more of the opinion that people needed to be in the office to work. We've now actually gotten a lot more flexible about that. So we have certain partners that are a couple days in the office, a couple days out of the office, and that's, I know that sounds so old-fashioned, but for us that was a hard thing. We really spent a lot of time together making decisions as a small business, and if someone is not there, it's just not the same. I mean, you just don't get the same dynamic. I mean, my partner and I, who started the business, my husband laughs. He calls up, and whenever he calls up, I'm in a meeting, I'm in a meeting, I'm in a meeting, which generally means that Michael and I are making some decision about the business in some way. So communication is important, being open, being flexible. What other thoughts about management style? We just, every once in a while we're like, oh, we got to manage. So we now have, we send our associates to our international offices. That's a new thing that we've just started. We decided that it would be easier for us to integrate the process if we had people going to other offices for like a year or so, and then they come back, and then we can do international deals more easily. Or it might be a way for us to keep people longer, So because it's a competitive market, and in order for us to, if we find people that we really like and that are really smart, we need to make it interesting for them. So we had our first associate go to London for a year, and he's about to come back, and I said, "Okay, you're coming back, Bobby, and by the way, you were the test case. You're the beginning of the program. Write me a report and tell me, sort of what we should do better and how we should think about it." And he was like, oh, yeah, okay, yeah, yeah. So we're sending our next intern now to our Hong Kong office, and, we'll see how that works. So part of it is, being a small business allows us in some ways to kind of learn as we go. And I think for at least my partner and I, we've created a culture that we're happy with and that certain people are happy with, and the ones that aren't leave. That's our management style.
That in and of itself is a style. It sounds like you and your partner are actually really good managers.
Well,
so I think again, one of the takeaways from the discussion is that you've got three very accomplished people, all with different styles, and there is not probably just it's always hard to fit one style in with the way a certain thing should work. I think everybody in the room, in some form or fashion, is here tonight because they're interested in their own careers. And I'm interested in your careers as well. So I'm actually going to start with Mary and ask you what your greatest challenge has been, how you handle it. But before, I'd love to ask you if it's fair, is there a right ratio between expanders and containers?
You can't, expanders, you shouldn't have probably more than 20%.
Yeah.
And you can't have too many expanders on one team or they'll really
I think it's an important
point.
Have
divorces, and a business divorce is really
And I would think that you would say it's not necessarily democracy, which is oft quoted.
So you sit on the opposite side as a container.
really, really important to me.
You drive me crazy. But we can't live without each other.
And that's what it's all about. All right, Mary, your greatest challenge and how you handled it.
Well, my greatest challenge in my current career, which is managing other people's money,
in returns.
2007, not 2008, when there was a meltdown in the market. When there's a meltdown in the market, I've helped you understand how much risk you're comfortable taking. And we know that there's risk in the stock market, and I can explain it. But there was something systemically wrong in 2007, okay? In 2007, cash froze. And many people don't even know what happened. When cash freezes, when I can't tell you can have $1 for $1 that you deposited, that was the single biggest crisis. And I would say the messaging about crises is really important. It can be, the most stress I've ever been in my life was I had to tell you you couldn't get your cash. And to think the very table stakes of working with me is you got cash. I understand if I'm buying 100 shares of IBM and they go down. That was very difficult. And you just have to learn to make sure that the person you're messaging to knows that you're on the same side of the table. Okay? So I've had problems in the different administrative problems or whatever, where the client, we care so much about the problem on my team because everybody has the same ethic, which is like, oh my gosh, let's drop everything for the day until we solve your problem. I've had my biggest triumph that came out of a challenge was when a client called and had a recurring problem we couldn't fix. And so someone on my team said, oh, I'll tell Mary. And he said, don't tell Mary. I don't think she could handle it. Meaning I was going to get so upset it might just ruin my day. So that's successful messaging of crisis, but it's difficult.
Great. All right. Fran, when you think about the people in the room and what they would do to advance their careers, what would you suggest that they do?
Work for Mary.
You need more containers.
I think that you have to find something that you love doing, for starters, which I know is hard, really, really hard. But it's really important to get up every day and be happy doing what you're doing. So that's really the key. And I think, the great thing about Northeastern and the co-op program is you get to try a lot of different things. So maybe you can actually figure it out, unlike most people that just get out of school and never know, right? Then they just go get a job and then they get stuck. So that would probably be my first thought would be, try and find something you really love doing. Then I'd say, you're responsible for your career. And, as a woman, we all kind of stay back a little bit, except for Mary. Mary leans in, we lean back. But, it's easy to sort of, wait for someone to come and, promote you, or someone to come and ask you to work on a project, or someone, it's very natural. You do your job, you do a great job. I'm like Rachel. I'm like the first one at the meeting, and I'm always prepared, and all of that kind of stuff. But sometimes you actually have to step out of your comfort zone, and you have to kind of ask for things, because no one is going to give you things unless you ask. And the difference between being assertive and aggressive is a big deal when you're a woman, right? You can be assertive, that's okay. People don't like it when you're too aggressive, right? So you have to kind of dance a little dance and be careful about how you do it. But, you really do have to put yourself out there and ask for things. I just hired a female associate, and she asked me what'll make me a good associate here. What do I need to do? It was a good question, of course, because she was a woman. And the guys would never ask that question, right? And I said, well, take responsibility for learning. Because what happens is people get busy, and because we're not a very managed place, you need to say, hey, I see you're working on a deal, and I'm not on that deal, but I'm really interested in that, so can I get involved? Can I sit in the meetings? Can I, kind of try and know what's going on, and, so maybe you stay late, and maybe you work a little harder. That's stuff that gets noticed. I got a lot of smart people that work for me. I know who's in there first thing in the morning, and I know who's the last one to leave, and and that's the kind of stuff that, the boss knows. I know in a meeting who's extra prepared, and who puts in the time. And I know who comes into me and says, I want to work on another deal. I have some extra time, or can I sit in that meeting? Or there's a conference I'm really interested in. Those are the people that I want to foster, and I want to move them along. So, but you got to take responsibility for your own, career. So, and I don't think I ever thought about my career like that. When I had my first job, one day they called me in, they said, we want to make you a partner. And I was like, oh, thanks, Like, I don't remember ever going like, okay, it's time for you to make me a partner, And I don't think I ever would have gone in and said, it's time to make me a partner. But...
I did.
And I wish I could, but it's hard to do.
Okay.
Anyway.
And Rachel, from your perspective as somebody who faced a challenge like immediately, when you kind of showed up, with a different set of expectations, what would be your advice for anyone starting out in financial services? Knowing that it's probably going to deliver something different than what you might have expected.
Yeah, I go back to, again, how I fell into the financial services to begin with. When I think about, how did I ebb and flow within my own career, it's interesting in listening to the advice that you just gave. I ebbed and flowed. So, some of the guiding principles that I followed, which was probably coming from being an athlete, I had to throw it in there somewhere.
You played Division I field hockey?
I played Division I field hockey,
Okay.
and I was a defenseman, which makes sense as far as why I'm okay sitting next to Mary, who's very aggressive and going forward, because I'll make sure she doesn't screw up. And when she sells something, I'll actually figure out how to do it. So we don't lose the client because of what she sold, right? She's been very creative, and I need her because she's very creative, but I got to figure out how to fix it. So within the Fidelity complex, I'm known as a fixer. And one of the things that I was going to encourage you all to think about as you're going through your career is, what's your brand? So I talked about when I first joined Fidelity, and I was sitting in that conference room, and 19, 25, 30 guys walked in. It was me. I'm exaggerating a little bit. I was sitting forward. I wanted to be respected. I wanted to be seen. I wanted to be heard. And again, I'm a defensive nature. I'm comfortable with who I am. And I'm comfortable in the position that I took. And that kind of goes back to when you have to like what you do. So, but the unexpected part, I guess, is, one of my biggest, I'll say, failures and the learnings when I first started my career is I had mentioned, I had accepted a co-op job. I graduated. I said, get me over the mutual fund side. And similar, I got these accolades and these promotions, and I'm thinking I'm really kind of got it going, you know. And I said, you know what, I can do that job. And so I asked to be transferred over into a mutual fund calculating an NAV, a net asset value. So what does that mean? It means figuring out what's the value of a security on a daily basis. And you know, there's all these corporate acquisitions. You got venture capitalists out there buying and selling companies, this, that, and the other. And you know, I had a really large book of business that I was responsible for. And back then, computers are not what they are today, and the automation is not there. So you had to do a lot of manual switching of flags. You had to flip something open to get something to happen, and the nav, and this, that, and the other, and roll it all forward, and this, that, and the other. And so, again, I'm sitting pretty, thinking I'm doing a great job, and then all of a sudden, 3 days before someone's distributing their income to their shareholders, lo and behold, I forgot to flip the flag back. Mm. And so the amount of income that's supposed to be distributed was so wrong. And I felt like such a failure. I'm like, I'm going to be fired. I don't know what to do. I want to go home. And I was crying. I'm like, I did the best I could. You know, I picked myself back up, went back into the office. I told my boss and looked at me like, what did you do? And I'm like, well, this is what I did. The guy next to me did the same thing, but he remembered. I forgot, whatever. Controls risk, right? This is part of the whole process. So what I really learned from that is it's not your failures. Your failures actually are your successes, because it's what you do with a failure, and it's what you learn from it that really is going to help you throughout your career. I'm sure Mary has a lot of failures she won't tell you about.
As long as I only do each one once.
That's the big thing. But
there's so many to do, right?
There's so many to do. And when I was thinking about how to answer this, I had this laundry list, and I figured, let me go back to when I first started in the career, because I think that probably resonates most. And really what taught me is, one, we all make mistakes. You have a team around you that are going to help you. And you need to learn from it. Again, I never did it again. Never again. You know, and it was a catapult. Again, it's paying more attention, being proud of what you do, making sure you have people double check kind of what you do in those critical moments, and then how do you innovate? And Mary talked a little bit about innovation. And innovation is how do you prevent that from happening again? What kind of things can you enhance, et cetera? So I think I answered the question.
You did. And we're ultimately going to move, and I know there's probably a lot of questions around the room, but before we go there, there's been a lot of good advice and good thoughts from the panelists already. I'm going to work backwards this time and start with Fran and just ask, if there are other tips or advice that you'd like to share, 1, 2, or 3 ideas. Before Fran begins, give her an opportunity to think about that for a second. If you've got questions after we complete this phase, we're going to ask you to come to this microphone right here in the middle of the room, because since we're streaming this, God knows where, we need to catch you on the microphone as well. But so begin to think about your questions. I understand this is not a shy group. I'm told there's always lots of questions, and certainly you've got 3 great panelists to bounce things off of. But Fran, Mary, and then Rachel, just any kind of batting tips that you would offer? Yeah.
Random advice. I think that as a woman in business, I have always felt the need to be more prepared, to do more work, to feel like, I do sit in a lot of meetings with a lot of men. We just had our annual meeting where we report to all our investors, and there were 10 presenters and 1 woman. That was me. It still makes me nervous after all these years.
Empowering, though, isn't it?
A little bit. I sort of sat there and I thought, oh, gosh, I have to make this presentation, but, wow, look what I'm doing, So, I work hard at trying to manage my image, and I think that's important in the financial community. Networking is something that I think is harder for women to do. It's an important part of my industry. I think it's, in some ways, I'm at a disadvantage because I don't go golf with the guys or drink with the guys or that kind of stuff. I don't think there's any real way around it. I don't think women network in the same ways, unfortunately. So I can't compete in that area. So what I can do is, I can try and be as smart as I can be. I can try and be as prepared as I can be. I can try and just show up for as much as I can. So that's how I've been able to, kind of deal with sort of what I think are sort of some of the disadvantages that I've had to deal with as being, in a man's world, which I still think, unfortunately, although I think it's changed somewhat, as you've said, in my world, it's not changed enough and quickly enough. But that's my random advice.
Mary?
I would say this is an evolutionary thing. Your first job will not be your last job, very likely. And the advantage of Northeastern is you're going to have had co-ops, so you'll have 2 or 3 jobs under your belt before you actually get your first career job. That's huge. If you could see your competition, you'd be amazed. I'm actually hiring my first Northeastern co-op. She's going to start July 1, I guess, next week. And I'm hoping to do kind of a continuous thing every 6 months, have a job dedicated for a Northeastern person. I absolutely, I interview people all the time. I told you I don't, but I do. I interview people all the time, but they've kind of gone through, other people have approved that it's okay for me to talk to them. But anyway, by far, the Northeastern people that came for the co-op, absolutely, I'm not blowing smoke, I don't have to. We're the best prepared, the most professional, asked the best questions. They were impressive to the point where we had 4 finalists and we couldn't decide because we liked them all so much. That never happens, okay? So my challenge to you is to determine what's your single best use in the world, okay? How should you be spending your time that you are going to provide your talents to the world in your unique way? And I don't expect you to know that after your first job, but every single mistake you make, and we've all made them, okay, I don't regret having been a teacher. I learned a ton. I don't regret the boring world of accounting. I learned a ton. I think of it, I use it every single day. I don't regret all the screw-ups I did because that's the only way I'm going to learn. I don't give myself credit because I do something well. I learn when I do something wrong. I learn the hard way. That's the only way I get to learn, okay? So the point is that it's evolutionary for you, but constantly have your eye on the prize, which is what's the single best use of me in this world? And then my final thing would be, again, somebody told me this, is when you start your first career, okay? Somebody said, put your head down and work harder than everyone else, which is, by the way, not hard. Like, seriously, the world is a bell curve, and it's constantly amazing, right? How hard it was to get a Northeastern, you find out that there's people at Northeastern that could get in and still don't work very hard, right? So there are very few people that work hard. So put your head down for 2 years and work harder than anyone else, and you will never have to work that hard again. On the anniversary of my 2nd year at Morgan Stanley, I had my first baby. I didn't know. If I'd known, I probably would have stayed home that day. But, but I worked the 2 years and kind of planned it. I had a plan. It kind of worked. After that, all hell broke loose. But anyway, the point is that you can actually see it, that I reaped the benefits of having worked that hard in the beginning. And people used to laugh at me because I was working hard. They thought I was cute. Well, they're not laughing anymore. That's all I'm saying.
Okay.
So I'll pick up where you left. Working hard, twice as hard as Mary. So no, that's actually great advice because, again, I think about, again, the evolution of my career, and I did exactly that. As I remember working, 60, 80 hours a week when I first started out, and it was because I was proud of what I was doing. I wanted to do it right, and I'd do anything it took to get there. I was very bold when I was growing through my career. I actually asked my boss when he was going to leave.
Wow.
I did. He left. The funny part, I just hired him back. So I did. Yeah.
He works for you.
He works for me. So some of the tips, I guess I'd say that I've learned or reflected on, like what has worked. One of the probably most understated things that you can figure out from a skill is listen. And it's not just listen to us up here or whoever your boss is, et cetera, but you really have to hear what is being said. So there's a difference in sitting in a room and listening to someone lecture you or give you guidance on doing something, and you're like, yeah, all right, when's he going to be done or she going to be done? But if you really hear what they're saying, and sometimes it's not what they say, it's what they don't say. And if you can pick that skill up, you're going to learn more about the nonverbal. You'll learn more from the experience than you would what's actually being said. So that's a skill that I've learned, and I reflected back on. How did you end up where you were, or what did you figure out, or you're going to do an executive conversation or presentation. You have to be short, precise, and watch what people are doing in the room. What is their body language? Are they looking at their BlackBerries? They're not interested. Move on. So there's little things of that nature. The other thing is, some people are very passionate about what they do, and they talk forever. Brevity is a nice thing. And I know at Northeastern it's a lot about being prepared, as Mary said, being prepared for whatever the meeting is, the conversation is. It's not about you, it's about the person you're talking to. What do they want to hear, not what you want to say? And that goes a long way as well. And I think it's been said once or twice. You spend an awful lot of time in your career and with the people that you work with. Find out what you like to do and be passionate about it, because you spend so much time at work, away from your families, that you really need to enjoy what you're doing. And if you enjoy what you're doing, you don't mind working hard, you don't mind telling your boss to get out of the way, and you're willing to learn and take on new responsibilities. So that would be my 3 tips.
All terrific. Thank you very much. Before we conclude, everybody's had a chance to think about questions. Giovanna, I'm going to look to you to tell me how long and far we can go with questions. But who wants to step up to the microphone first? Okay. Yeah, you can raise your hand, but go to the microphone to do that. Great.
Why don't we get 3 or 4 people lined up?
Yeah.
So it's very important for women to be assertive but not have their actions interpreted as being aggressive. So how do you balance that line?
Carefully. It's not an easy question to answer because it is subtle, right? And part of it comes from, as Rachel said, being able to sort of read your audience a little bit, right? And part of it comes from, over time, understanding the difference between assertive and aggressive. So assertive is the difference between, being able to feel comfortable asking for things, but not demanding things, So I think it's, it's not so easy to describe in words what the differences are, but I think that you just need to, as you're going through your career, and you're thinking about sort of how you want your career to progress, you can't just let it go by itself, that you have to step into it, that you have to sort of help it move along. And, you're going to have to just sort of figure it out as you go. But, aggressive is, the difference between in your face and not, right? So it's a subtle difference that you'll learn, because if you get too aggressive, they'll let you know,
I think you guys are in a really fortunate position because, my mom's generation took care of a lot of the heavy lifting on this stuff. When I was a kid, we went to schools that were just for girls and just for boys, because the theory was that you couldn't have the girls in the same classroom with boys because they'd be twiddling their hair and they'd be worrying about what they were going to wear all day. So if you went to an all-girls school, then you could thrive, you could be good, and you wouldn't have to worry that you're going to look too smart in front of a boy, right? Well, now I have 2 boys, and I really wanted them to go to all boys schools because the girls were eating them for lunch, okay? And they knew it. So the point is that I think that there's a lot more respect for women now, and it's not universal, but in your generation, I think there will be, because the boys who grew up with you get you in a ways the boys that grew up with us don't. So I'll just tell you a quick story. I have a friend who's very well known, and she went to Iceland, and the president of Iceland's a woman. So she brought her children, and she had a 6-year-old son. So her son was able to meet the female president of Iceland. And he looks up at her and he says, "Hello, I'm really happy to meet you." And he said, "Can I have a question for you?" And she said, "Yes." And he said, "Do you think someday a man could be the president of Iceland?" Come a long way.
I'm not sure I can follow that.
Let's go ahead and go to the next question.
Okay, hello, my name is Nicole Jones. My question is two-pronged. The first part is, I guess, addressing all 3 of you. What would you say are things that you look for in interviews or when hiring applicants? And the second, just to diverge, it's almost completely unrelated. What do you think of China or the East as, I guess, the emerging capital center of the world? I know HSBC Bank is considering moving out of London, their headquarters. And what's your take on the emergence of the East and China as it transitions from a to more of a middle class economy? Thanks.
Rachel, you want to start?
I'll start with the resume, and then we've got experts who can talk about the other part. I was telling this story earlier tonight. So, one of the things that I look at from a resume perspective is, one, what experience do you have? Period. Have you worked? Period. How long have you stayed at a job? If you move every month, 3 months, 6 months, I don't want to put my time and effort into hiring you, so I wouldn't hire you. There was a story. We just hired an intern in my organization, and the gentleman, I don't interview often either, Mary, but I let my guys interview. And funny enough, I have 4 managers, they're all men, not 1 female, so I'm a little bit of a, anyway, control freak. But the 2 resumes that came across our desk, and one was a gentleman, one was a female, and what it came down to is the female was a swimmer at a college and a lacrosse player. Wasn't my decision, I'd have a bias automatically, but the recommendation came forward that we need to hire the woman who is an athlete. Now, why an athlete in my eyes? They're dedicated, they're hardworking, they're committed. Those 3 are great attributes to hire no matter what industry you're in or the financial service industry. So those are 3 things I look for.
I agree with the, for us, it's very specific what we're usually looking for, but if we're hiring someone who has a couple of years out of school, it would be specific to what the work experience is. But we do always look at interests to see sort of what the person does to sort of get a sense for sort of how balanced they are as a human being. But a lot of it, for me, and I do a lot of interviewing, I basically interview everyone we hire, unlike Mary. And I spend most of my interview style is to be very comfortable, conversational, and just sort of get a sense for what that person would be like culturally and how they would fit in. Most of the time, I think there are lots of people that can fit a job for us. And it really comes down to, because we're so small, so our New York office is about 30 people, every time you add 1 person, it changes the dynamic. And so it's more about the culture. So we'll have, our associates interview, we might hire, our vice presidents interview. We have a lot of people interview people, just so that we know how they'll fit in. So a lot of it has to do with chemistry for us.
Fran, with your Hong Kong presence, you want to talk about China at all, or?
No, I want Mary to talk about China,
please.
China's hard because it's this huge economy. It tends to be more homogeneous. So there's not a lot of innovation coming out of China. Similar to Japan, they'll take innovative ideas and make them better. And that could be what's happening with China. They're building like crazy. They're doing a lot of really interesting things. We have to respect them as an economy. I don't know how it's all going to evolve, but it'll probably be a strong story. And more and more American-born college students are launching into China, looking for that opportunity. The language barrier is going to be a big issue. So anybody that has the language and the American education is going to be way ahead of the game.
Thank you.
Hi, I'm Carrie. I'm 2nd-year business student. I have two questions, and the first one is, how do you know that a career is the one that you really like? Because during my first co-op, I worked for that great company, and when I woke up, I was thinking about, oh, the company is great, and the internship definitely will look good on my LinkedIn profile. But when I was doing my job, I don't think that's the one. But as long as I'm good at it, good at the skills, and then I feel like that might be something I love. So how do you determine whether it is just the working habit or it's the one you really love? It's a little tricky.
Yeah, that's right. I'll take a stab at this.
Get in there, Rachel.
You know, I think some of the things that you have to, we talked a little bit about owning your career, right? So even as an intern, you know, what you need to think through is, what are the pros and cons, right? What did you like about that job? What didn't you like about that job? And then think about who you are as a person. What are your likes? What are your dislikes? And did that job or did that industry, or what, you know, there's so many different aspects of financial services, or you know, there's economics, marketing, finance, accounting, operations, trading. There's all sorts of stuff. But when you think through what you did like about that job and what you didn't like, what was the balance? Did you like it more? Did you like it less? What were you passionate about? What weren't you passionate about? And when you think through those and you write a list down, the pros and cons, it'll tell you whether that was the right decision for you. You want to pursue that, or maybe you look at those things that you really enjoyed, and is there something else that you can take a left step to and try something different that's going to capitalize on those things that are your strengths. What they always say about development is you'll never fix something that you're not good at, but you can grow on those things that you are good at, and that's what you want to capitalize on, who you are, what skills you have, and how do you move forward with that. Because if you think I always say, if you think I'm going to be a portfolio manager, right, but I don't have the intelligence or the insight to doing that, maybe that's not what I need to focus on. But if I'm really good, I said my brand is a fixer. I can fix anything. I can solve whatever challenges come up with or products are solved. I know I'm really good at that. So I found something that I'm really good at, and I found a career in that. So you need to do the same thing with your own self and that experience.
So I have a second question. Did you guys finish, or?
I'm all set.
Sorry. I have a second question. It's specific for Mary, because you were an audit manager and then you're in financial service industry. So I'm wondering about what skills or what things did you learn from auditing to financial service?
Oh, I'm not scared by technical things. I know how to manage people because they really focus on managing. So there's layers of review and that sort of thing. So it's a huge benefit to me. I know how to get information out of somebody who's suspicious of you. It's all very good. Very helpful.
Thank you.
Hi, I'm Morgan. My question is also to Mary. It was kind of similar to that. How did you go from transitioning from like more of the technical to working with clients, like how that went, and also what you look for in terms of skills for someone who might be more experienced with the technical but not so much with clients when they're applying?
It's really kind of a matter of what you're most comfortable in. So I am actually detail-oriented, very actually, probably because of my training as an accountant, but I really like people. And what floats my boat is every morning I've got completely different sets of people in unusual circumstances every single day. That's what I love getting up in the morning for. So it wasn't a transition going from accounting, it was a relief. But it wouldn't be for a lot of people, right? So there's a thing called a Myers-Briggs test. Have you guys ever heard of that? You should take it because it's well worth it, okay? If they charge you $50 for it, you should take it, okay? Because it'll help you kind of understand. You don't want to like overthink it, but it'll help you understand what your relative strengths are, where you're going to gravitate to, and start to think, is this right? Maybe I should be kind of redirecting, kind of repivoting my career choices.
Thank you.
Thanks.
Hi, my name is April Lee. I'm a MSA and BA program student at Northeastern, graduating this summer, if summer ever comes to Boston. But I'm going to join PricewaterhouseCoopers this August. Actually, yeah, September-ish. And then for my career, there has been two kind of voices. One is that you should stay until you make it to manager and get to see a bigger picture of the whole business. And this voice is mostly from partners that I respect a lot at PwC. And then another idea that I developed from today is to find what you like most and find your strength, and then work for the company that you like most. I guess my question is, what if, which direction should I go? Either work with PwC for maybe 5, 6 years, and then look for another opportunity, or just find a on my way to there, find the one that I like most. For example, what if someday I decide to work for Mary?
I would take your job. No.
I two complete different sides of the coin, because I stayed at PwC for 5.5 years because I really liked it. I liked progressing. I did like getting promoted, but I liked progressing my skill set. I liked learning how to manage other people. I liked increasing responsibility and always being thrust into kind of risky situations to learn more. I really liked that. But I had to be able to take the risk to leave what now I've been typecast as an accountant. So on the other side of the coin is my son, my older guy. He graduated from Bucknell, then went for a master's in accounting because you need to do that for a CPA, passed the CPA exam, went to Ernst & Young, and hated it. And I was his first cheerleader to get out of there because he didn't want to be an accountant. He needed to do something different, and it's good to know that quickly. He didn't have nearly the same experience. Mine was all team. I still talk to my people from PwC all the time. Okay, they're my clients now. He didn't have a team. They didn't put him in that kind of situation. It was all by himself. So it was a very different dynamic. He was more focused on numbers. I was more focused on what I was learning. So you'll know when you get in there, and you just play it for as long as you want. As long as if you want to be an accountant and typecast yourself as an accountant, that's one thing. But if you're going to want to take a risk and redevelop your skills in another area, don't stay too long.
Great. Next question.
Hi, everyone. I'm Jennifer. I have a question for all of you guys. So I've noticed that you guys all have a pretty broad background working at different companies and different positions. So do you guys feel that it's important to sort of have that wider perspective? And also, could you just speak about how your varied experiences have helped you be where you are now and succeed?
I feel like I haven't had that much varied experience, but I'll answer it anyway. I've only had 2 jobs, and actually I pride myself on not having interviewed much. Actually, my mic is dying, I think. Is this on? There we go. I mean, if you don't know what you want to do, I think it's probably a good idea to have a broad experience, but I wouldn't have broad experience for the sake of having broad experience. So, as we've talked about, it's important to find what you like and sort of focus on that. If you don't know what you want to do, then, I would try a lot of different things. But for me, once I was in venture capital, even though I didn't know that I should be in it, once I got there, I knew that was what I liked. I knew I liked private equity. I liked being around really smart people. I liked being around innovative people. I liked everything about it. The one thing I didn't like about the venture fund that I liked about my present business is in venture capital, deals, you invest in a company and then you nurture it forever. I didn't have the patience for that, actually. What I do now is much more transaction-based. So we look at a deal, we price it, we win it, we lose it, we move on. That's much better for me, for my personality. So even, if you decide you want finance, there's a million possibilities within finance, I meet people and they say, oh, you're in finance, so what should I, how should I invest my money? Or, what do you think about the market? Or, everyone always assumes that everything is the same, but there are lots of different things to do, right? So figuring it out is the hard part, but the sooner you do it, the better, right?
Yeah, go ahead.
I was going to say, so I work for 3 different companies. So over 25 years, 3 different companies, and I must have had 12 to 14 different jobs. So when I first started out, again, I bobbed and weaved, right? So there's a couple of things that I did. I always volunteered, and I think there was some career advice earlier. I always volunteered to take on projects, which created a new opportunity for me in a new career. I launched investment products. So we had some brilliant people coming up with them, and I had to launch them, figure out how to do that from an operation perspective. Then I took a sidestep and did project management for asset transfers and transition management. Then I took on a client service role. Then I started managing multiple different teams because I had that experience. So, but it was bobbing and weaving and figuring out. I like the financial service industry. I get a lot out of it and a lot of enjoyment. I like to learn, and so I always volunteered. Said yes, I'll do it. I can do that. Get out of the way. All those things, and that just opened up opportunities. So if you find a company that you like, I think the company is actually probably one of the more important things to figure out. What do you like? I left one company because it was too small and I felt like there was no headroom. So it really comes down to you as an individual, but certainly quickly explore, what is it you like, what is it you don't like, and if you have to move to find the next move, I would do that.
So I spent 5 years at PwC, and I had 5 different careers, because every time I got promoted, I literally was expected to know a completely new set of information, and it was constantly evolving. I think you stay at a place where you're thriving until there's nothing new or interesting to learn. I left because it was starting to get boring. Because when I became a partner, then what? What was the next step? And I wasn't going to progress in the way I wanted to. But you soak up as much from every experience as you can, and every time you screw up, you soak that up too. And you keep your head up, and you just keep on moving. So if you are constantly learning things that you're interested in, stick with it. If you're not learning anymore, or what they want to teach you don't care about, move on.
Great, right. Thank you so much.
All right, I think we could stay here and ask questions for even much longer. Unfortunately, this is going to be our last question. I hate to disappoint the people at the back of the line. This is going to be our last question tonight, because Q&A is standing between us and the dessert.
We will give them first rights if they want to go up and ask the questions first.
Great. Thank you, Kate. Anyway.
Pressure's on, I guess. So I've actually been a caddy since I was 14 at home in New Jersey. I'm now a 5th year here at Northeastern. I accepted my full-time position with a job.
Congratulations.
Thank you. But one thing I've learned from caddying, I feel like I've learned a lot of life skills, and you just meet a lot of people. One of the things I noticed is there's a lot of members at the club who are careermen. They've been at the same firm for years and years. But now I feel like a lot of firms, they used to be able to work their way up the ladder. Now I feel like a lot of people, or firms even, when they look to fill open spots, they're more likely to go outside of their own ranks to kind of cherry pick people for specific roles. Do you guys, I was told just if one of you guys could answer, what do you think of basically company loyalty and how me as a young associate should kind of handle that? Should I be looking to jump ship as often as possible, or should I look for a firm to kind of let me work my way up?
So I've been at Fidelity for 19 years, so I certainly have a lot of loyalty to that company. It's interesting because when you talk about if we're replacing or we're losing people that have what we call institutional knowledge, so knowledge has been built up within the company and within a specific regime, we need to have a balance. We need fresh ideas, and sometimes having just the institutional knowledge, you want to broaden, you want to get someone's outside view, and that's sometimes why you go outside to get talent that comes in. From a personal, it's really going to be up to you as far as how long you want to stay with the company. Whether you can grow, you certainly can grow within. It's going to take time. It doesn't always happen when you expect it to. Certainly, as I give a lot of advice to folks that work across our organization, and they say, Rachel, why did you get, how did you get there? And my advice to folks is, nothing ever happens when you want it to, but you have to be patient. But to Mary's comment earlier, if you're not happy with what you do and you're bored, then move on.
Thank you very much.
Your grandfather worked for the same company his whole career and had a pension. You will not have a pension, okay, unless you're a government employee of some sort, right? So you shouldn't grow up thinking that the company is going to be loyal to you. If you don't have a symbiotic relationship with the company, like what's in it for them and there's something in it for you, you're going to take care of yourself. That's what you have to do. I happen to have been at Morgan Stanley, our predecessor firm. I have like 40 business cards, same desk, basically, for almost 30 years. but I get what I need from them, and I don't mean to sound mercenary, but they get what they need from me. I would have left if that didn't happen.
Yeah, no, I agree. I have a brother-in-law who just retired from IBM after 41 years. But no one stays at companies that long anymore. And I think your career is going to be a lot different than that. I think you're going to have to move around. Although I would love everyone who comes to work for me at Pomona to stay for 20 years, but that's just not going to happen. So you need to think about your career as, what's good for you. And I think generally, I find it all the time. When people come into me and say, I'm leaving, I got another job, and I say, oh, really wanted you to stay, I really think you're great, and they say, but I'm going to make this much more, and I'm going to do this, and I'm going to do that, it's very hard for me to say, well, stay, And if I were them, I would do the same. So you probably will not be in the same place for 40 years. You will think about your career as, I'm going to start someplace, and I'm going to move along, and I think you're absolutely right. There are no pension funds anymore. So put money in your 401k when you can, and, start saving so that Mary can manage your money for you.
All right. It's a terrific evening. Truly, three great panelists, inspirational as the forum suggests. So, Rachel, Mary, Fran, thank you, and thanks for everybody for being here.